How's it going, guys? It's Ralph here from Beyond the Huddle, and welcome to this week's Bitcoin forecast. It's actually a very special video today because we have finally seen the signal that we've wanted to see for the past 4 or 5 weeks, or even longer if you've been following the individual shorts on the COT of the asset managers. We've finally seen the positions go below their average, and guys, again, if you've been following our videos, you know this is the one thing we've wanted to see in order to be able to call the low in the market. Now, of course, as I'm going to explain later, the kicker here, a little TLDR for you guys, is that we need to see them continue to stay below the average, okay? So that's one thing that you guys are going to have to look for. But yeah, again, very exciting stuff because this could mean, and notice that the price has now gone up between 20 to almost 30%, I think. We'll take a look at that later. But again, the price is very reactive to how these asset managers hedge their positions, or they add their shorts, or they reduce their shorts. In fact, last time that they increased their shorts was back in November, and that ended up being high. See, so now that they've actually gone below the average on the shorts, we should see a pretty exciting moment in this market, and we're just going to let the price guide us on the ups and downs. But now we have the macro backdrop. Okay, so with that being said, we're going to go through the COT first, take a look at the asset managers, then we'll move on to the volume and price. And here you guys have right here, you guys can see our Discord group, and there will be a description, a link in the description below for you guys to join if you're interested in following along with these types of COT analysis, or you have any questions for us, or you want to talk about the volume profiles or value areas. Anything that you guys might have in mind. So feel free to join. It's free, and we're happy to have you guys there. So let's get started. Okay, guys, so moving on, again, to get started with the COT here, pretty much the most exciting part that you're going to see here, and it's the asset managers. As of February 1st, we have actually increased our longs, or I guess they have actually increased their longs by 11 contracts to a total of 5,536. But the most important one, of course, that we're all very excited for is that their shorts have actually declined by 301 contracts to a total of 703. Okay, so what has that done? Well, from last week, or even 2 weeks ago, if you guys remember the percentage longs, so you could look at this picture right here, for the asset managers was actually down to about 83%, and now they've actually increased in just 2 short weeks. Last week I think it was around almost 84, or actually maybe hit 85 last week, and now it's 88.7. Actually, I'm pretty sure we can quickly just check right here. You can see right here it's loading, and yes, there it is, right? So last week it was 84.6, and now we're all the way up to 88.7. So crazy increase, guys. And again, it's because of the distribution between the longs and the shorts. There was such a large decline in these shorts that it caused the percentage to go so high up. So then let's see what that looks like when we look at it on our indicator, which gives us the insights to really break it down. And you can see here again, the key was that we're always net long. And the kicker was when we double click on this, we could see the shorts. We'll look at this, right? Like I mentioned before, the key that would have, let you know that the high was going to be in soon in November was that you had gone above the average in shorts. Okay, so it's not just the increase in shorts, it's the increase above the average, and then you wait for price to catch up and tell you when that's going to happen. Okay, of course, as you guys know, based on price, we've been saying that we've been bearish this entire price leg, except 2 or 3 times, somewhere around here, and in this bullish candle, and maybe even here. And then look what happened now. For the first time, we have finally seen these shorts go below the average. Now, guys, it's very important, and I keep saying this, this is actually what I wanted to see, right? But now that it's finally happened, let's go through it again, right? In May, when we called the high, it was a very easy one because it was net short. Again, the shorts were above the 60. It never hit 80, but it did get above the 60, and that's what you want to see first, right? So you want to see the longs hit above 60 first. It did that here as soon as this happened here at 29K, and then you wanted to see them go to 80, right? So here we did what, right? Look at this. The shorts went below the average. So when the shorts went below the average, you really didn't go much below that low ever again. So that could have been one wave that you could have seen that low coming. Now here's the difference, right? They were below average shorts, but you were net short, and it only caused this 70% move higher, okay? So I was comparing it a lot to, to the September move and all that because we were net long. But look what happened here. September of 2020, you were net long, but the shorts were consistently below the average, okay? So you had one big, huge drop in the shorts, which means they repositioned aggressively during this drop right here, and then prices went on to rally about 500%. Again, while they were mostly long, and that's what we're seeing right now in current prices, right? Even during this entire 50% drop, I kept saying I don't believe that this is, a macro high, that the bull run is over, because it didn't make sense, right? The asset managers, the guys with the big money in the market, they're still positioned wildly bullish, and their position long has not wavered, right? They have not decreased that position. It was just a matter of, okay, how low can we go? Obviously, using our value areas and all that good stuff, we were able to see, how we were going to call the low. And, spoiler alert, it was this weekly demand and the previous year's POC, but we'll go over that later. But then that was the first part, right? You can use price, you can use your value areas, you can use your volume, and as long as it stayed bullish, you knew that eventually it was going to bottom out. The second part to confirm that low would be what? You want to see the shorts, what caused the drop in the first place, right? They knew some turmoil was going to hit the market, so they start to hedge their long positions, right? And for you guys, if you want to see what their longs look like, look at this. I mean, this is by far the largest long they've ever had, ever. I mean, you can't even see the previous longs, right? If I hide that right there, look what it looks like. Their longs only ever hit 700 in contracts, and now we're at 5,000, almost 6,000. That's insane, guys. So something big is going to happen in this market, and I'm so excited for it. I'm just waiting for the price to catch up, for us to get those long-term reversal signals, and the very first sign of that is to finally go below the average. But remember, in order for us, so we are calling for a low here. That it's already been done, okay? But the key to continue calling for this low, as you guys are going to see us do week in and week out, is for these shorts to continue to be below the average, the same exact way that it happened here back in September, okay? If that can happen, then and their longs right here, their percentage longs stay bullish, then we will see a 100-200% move higher. I'm not going to call for a 500% move because that's just crazy, right? Obviously, it was much easier to move the market up 500% when we were back at 10,000 than moving the market up 500% when we're at 44,000. Okay, so a 100-200% move, that'd be interesting. I would definitely be expecting a new all-time high, as long as these shorts keep below the average, and we keep seeing the bullishness every single week using our volume profiles and our value areas. Okay, guys, so that's what I have for the COT. Very, very exciting stuff. I really do hope that the asset managers continue this trend and they continue below their average in shorts, and that means the price should be pretty parabolic, pretty aggressive, and we should be buying every dip. So let's move on, guys, to the price analysis and the volume part. And remember, if you want to talk to us about all this type of analysis and you want some more insights, make sure you check out our free Discord in the description below and you join. We hope to see you guys there. So let's move on now to the price part. Okay, guys, so now that we know the sentiment from the COT and the asset managers, the large players in the game, we know where they stand, and now that they've been reducing their shorts, we know that they're positioned to be bullish. So the question becomes, when the dip happens, if dips happen, where do we buy? How do we know when to buy? Okay, so there's two different ways that we do that here at Beyond the Huddle, and one of the ways is using our what used to be called BTC monthly weekly levels. We've been using that for a while. You guys can see here that it helped us call the 20% drop here in prices. You can see right here, that was that really ugly 43k to 33k drop, and that's just because the idea is that if when I open the week, if I'm below the level, then USDT prices are expected to be bearish. Okay, so that week it was expected to be bearish, and then we can go take a look right here. Actually, this past week one, you can see right here the price when the week opened was above it. Okay, so that means we expected USDT prices, and we're calling it now the USDT bias indicator. We think it gives it a more accurate description of what it does, and you can see right here that it barely missed it here, took off. We thought that it was going to keep going, but nonetheless it came back a second time, and then it ended up going for 16%. Okay, so that's one different way. And of course, the second way would be using our volume profiles in our value areas, which you guys can see here. So let's start to break down these levels and how they look for this current week, right? So the week already opened here, and you can see that the weekly level was all the way down here. Okay, so that meant that prices could fall from the weekly open. They could fall about, wow, okay, so there we go. They could fall about 9% and we would still be bullish, okay? And then, so look what happened now, right? We're bullish. So the prices moved higher. But the second part that we actually haven't talked about in a while, because it takes 30 days for a brand new level to happen, is that, you know, because we're in a new month, in the month of February, so now we're actually above the purple zone, which is our monthly level. Okay, now this is really important because if we go back to our monthly charts, and you guys can go look back at the history of our videos and our work, and that's why I've started to post them here on Twitter so you guys can see what the history is. In December, we were actually below our November level. So what that told us is that we expected December to be a bearish month. In January, we were below our December level. So what that told us is that we expected January to be a bearish month. Well, look what happened, right? Both December and January were bearish months. So if that's how that looked and that's how that was, but now I'm telling you that one, the COT has finally decreased their shorts, the first time since late October, early November, and we have now gone above the monthly level of the USDT bias. That means we're, at the moment, as long as we stay above it, we're expecting the month of February to close bullish. All right, so now you can start to see how we have a fractal for the monthly candle and we have a fractal for the weekly candle. Okay, now what guides us as we develop every single week and every single month? Okay, and that's when we use the volume profiles. Okay, now, I'm not going to go into too much details because I would, this video would take forever. Again, if you guys want more details on this, feel free to go into our Discord, and there will be more information there in the description below for you guys to, learn all about this and whatnot. But the important thing that you have to figure out and pay attention to is that right now, we are actually bull trending because we're above this green zone, okay? So what that means is that when comparing this week to last week, we are in a trending phase, and we should stay that way until we go back below this zone right here, okay? Now, that's the weekly level, okay? So picture the weekly candles, and I expect the weekly candles to develop a certain way because of that. But now we're actually hitting a very important level, and I've been calling for this level ever since down here, if you guys were in the Discord group, ever since about 34,000 when we hit this. And what level, first of all, what level is this? Well, if I zoom out a little bit, that is actually previous year's POC, right? And that's why I was saying that when we hit either this POC or this valley area low here, first of all, I was never believing that the bull market was over because the COT was net bullish, and I was never believing the bull market was over unless, okay guys, and I kept saying, unless we could go below this. That's the yearly value area low, okay? If we went below that, then things would have been way different. But because of how we were positioned in the COT, and because we had so much support down here, I was expecting a bounce, somewhere around here. And like I said earlier, that was the weekly demand. So we can see it right here. I can just put a horizontal line right there. There it is. That was the weekly demand. Hits it perfectly here, and now it reverses. Obviously, we're approaching the supply, the supply zone, and that's why I'm saying right now that this is a very sensitive moment in time because there's a supply zone and we're at the premium of the range, right? But it's not just the premium, okay? It's this new stuff that we're starting to talk about, which is the value areas. It's actually the monthly value area high and the quarterly value area low. Now, again, I'm not going to go into what all that means because I'm just going to bore you guys, but just know that the short-term time frame, which is the weekly value area and the weekly USDT bias, and of course the monthly USDT bias level, they're all bullish. So at the moment, I'm expecting this to get broken, okay? So maybe next week we are below, the green line, because these change every week. But at the moment, for now, what the lower time frames are telling me, which is the weekly, is that we should keep going higher. And then what the higher time frames are telling me, which is the monthly and the quarterly, that we should expect some very strong resistance here right around the quarterly open at, using S&P/DT, and at the monthly value area high and at the quarterly value area high. Okay, so once again, if you guys have been following us for a while, you guys can see right here, it's been about 32 to 34% rally. We're currently bull trending on the week. So for now, all you guys have to know is for this week, I'm not bearish until we go back below, or I'm not worried until we go back below this, in which case I don't expect Bitcoin to trend anymore. I would expect it to consolidate, and I'm still bullish until we go below this weekly level right here. Okay, guys? So that's for the week. For the month, I would be bearish if we go below this zone right here. So yeah, there you have it. Again, I don't know if that's going to make much sense for you guys. It's kind of hard to just explain this, price action and volume profile part very quickly to someone who has no clue what we're talking about. But one last time, if you do have more questions and more ideas and you want more answers, feel free to check out our Discord. We'll be happy to explain everything to you guys there. So again, very, very heavy resistance found right here between this gray zone right here. So with that being said, guys, I hope you find some value in this. I hope you're as excited as I am because the COTs finally went below the average in shorts. And as long as that continues, we should expect to see parabolic increases in price. Last time it was a 500% rally. I don't know what it'll be this time. I guess we'll have to find out and let price guide us. So talk to you guys soon. Peace.